I think one interesting way to look at the Bank of Japan meeting is through optionality. And if we have a look at overnight implied volatility in dollar yen, we can see at 13.2% is exceptionally low considering we have a central bank meeting in our midst. And I think clearly categorically the market is saying that future moves in dollar yen will be driven specifically by the feel-good factor towards Trumponomics, the idea that fiscal levers could spur the Federal Reserve to be more aggressive with rate hikes going forward, I think really clearly is driving the currency market much more categorically than anything the Bank of Japan meeting are expected to do. Now, in terms of this meeting, there is very, very low expectations. I think at the best, we're expecting some changes to their economic forecasts. And I think Mr. Kuroda, the head of the Bank of Japan, spoke about that recently at the Davos convention, where he expects growth for 2017 to average 2.5%. So I think with that in mind, there's a good chance, and local press has been around this as well, that we could see their growth targets for 2017 being taken up 20 basis points from 1.3 to 1.5%. I think there could be some modest tweaks to their 2018 numbers as well, but on the whole, that's probably the most we're going to get. In terms of inflation in Japan, we know inflation has been trending lower. They changed recently to what they call core inflation, and that's come off from around just over 1% back in 2015 to where they are at the moment of 0.1% or 10 basis points. So it's trending lower, and clearly what we've been seeing from moves in currency markets in Japan and other asset classes is not really spurring on inflation in Japan. I think their inflation forecast for 2017 and 2018 will stay largely unchanged at 1.5% to 1.7%, and they're still very much of the view that they'll get to their inflation forecast longer term. But of course, that's largely down to what the US will do and what happens with dollar yen, because mostly that will be driven by the dollar side of the equation. Now, in terms of what's expected longer term, well, it would be interesting to hear if we hear any rhetoric at all, because, coincidentally, this is the 1-year anniversary of the Bank of Japan going into that negative deposit regime. No one's really expecting any changes to that negative deposit rate of 10 basis points. And also, the run rate of exchange traded funds are expected to stay the same, as are the yield curve control, where the Bank of Japan, very famously have come out and targeted that 10-year government bond and trying to keep that at zero. So as US Treasury yields move higher and the yield premium increases over Japanese government bonds, we see a lot of capital moving out of Japan into the US to take advantage of that high yield. So not much is expected from this meeting. In fact, if we look at the trading in dollar yen, we can see that the January downtrend has been broken. Specifically, I think the playbook is if we see a breach of the neckline of the double bottom at 115.62, which is the January high, you can probably see a move up into that recent high of 118. I think clearly, if you look at the daily chart, you can see strong bids coming into dollar yen around 112.60, that kind of area. I think if you break that on a closing basis, it takes you down to the 110 level. So that's really the way we're looking at this at the moment. We're not expecting too much from the Bank of Japan to drive. This is more a dollar story, and I think therefore you've got to look at ISM manufacturing numbers, a Fed meeting, and of course the non-farm payrolls on Friday. Not expecting huge amounts at this meeting, more to come in the months ahead.